Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to talk about the 3 real estate lenders that all new real estate investors need. If you want to scale to the next level, if you want to do 5, 10 deals at once, you need to have the right relationships in place or you'll never get there. The first lender we have is the hard money lender. A lot of people fear hard money, and I get it. You can hear a lot of horror stories. Hard money loans do not come with a lack of teeth, as lawyers call it, meaning they have a lot of clauses buried in these things where, if you don't pay or you don't execute, the lender can come take the property. They could bang up your credit. Like, a lot of things could happen. But once you take hard money using, other people's money at its maximum, like we have 100% hard money lenders. They'll give you 100% of the capital to purchase and renovate properties for a living. So this is 100% leverage to go out and buy real estate. You can get that through a hard money lender. But you need to understand how it works so that you can do this conservatively. So we're going to talk about how these lenders work and how you can tap into these guys. So hard money lenders, one, they're a dime a dozen. I can introduce you to 50 to 100 hard money lenders today if I wanted to, right? Here's how most of them charge. They charge something called 3 points and 12% interest. So if you're new, you might not know what a point is. A point is just 1 full percentage point. So how you map this out mentally is on a 100K loan, they're going to charge you 3 points, which is $3,000. 3% of 100,000 is 3,000. So they're going to charge you $3,000 up front. That's an origination fee. That's just for producing the mortgage, for putting together the total mortgage. That's their fee, 3%. Then they're going to charge you 12% annually. This is an interest-only loan, which I'll talk about next, but 12% annually. So that's going to be, I put 1,200, but it's about $1,000 a month. It's going to be about $1,000 a month of a fee, right? If you held this loan for the full term, you would pay somewhere between 12 to 13,000, because the terms that a hard money loan comes in is typically 12 to 13 months. Most of the lenders that I deal with go at 13. This means you have a year to execute on this deal. I wouldn't necessarily recommend utilizing hard money on your very first deal unless you have some guide rails, some type of mentorship, somebody watching over your shoulder, or who's handling construction, or a construction crew that you were referred to that can execute within a time frame. Because if you're clowning around on your first deal, you don't know how to do a rehab yet, and you run into one of these hard money loans, and the contractor runs off with money and you're getting burned and you're kind of going through the ropes, you could run into the back end of that 13-month term. Now, a question I'll get is, well, what happens at month 13 if, I get to the end of this loan and I don't pay? At month 13, they will have some type of extension ability. So it might be like, hey, you pay 1%, another $1,000, we'll extend it for 6 months. They will try to extend. They're not necessarily out to take the property. Lenders typically don't know what to do with the property. It's like a dog chasing a car. If they caught it, they wouldn't know what to do with it. Like, literally. So they don't want it, but they're going to have to step in at some point because they have to protect their reputation. And hard money lenders are usually getting their money from someone else, which is something you should know. These hard money lenders are typically not people who are running around with tons of cash. Like, they are borrowing cash from somebody who has way more money than them. And then they're just underwriting and lending it out to you for a fee. So they owe somebody that money, which is why they start to get kind of panicked at the end of the day. You typically want a 620 credit score or higher for hard money. I do have lenders that'll go down to like a 500, and they'll underwrite the deal and they'll give you 100% leverage. Crazy enough. But they're going to be way more conservative on your after repair value. Your after repair value is what the property is worth after you finish the renovation. That's what it's worth. So even if I buy a property for 50 grand, that's not the ARV. The ARV is if I buy it for 50 and I put 50 grand into it, and then I get it appraised, the appraiser might come in and say, well, property's in this condition, they're selling for 220. So the ARV is 220. That's what it's worth after I did the repairs. So knowing that after repair value, once you get good at underwriting deals and pulling your comps and understanding your ARVs, you can now back your way into what these lenders will give you in terms of a loan. A hard money lender will give you 65% of the after repair value. So if the after repair value was $100,000, they'll give you up to $65,000 to purchase and renovate. So what I do within our boots on the ground program is I try to find deals where we can purchase them and renovate them at 65% of the after repair value. This is what I'm doing. If I can find any deal on the market, which I find a bunch of deals, I probably find 5 to 10 of these deals every week. And we'll do a session where we just go through and I just show you. I might start doing this weekly for you guys because I think it'll be helpful. You guys can let me know in the chat in the comment section if this will be helpful. But I may start going through weekly and just doing a session, a quick live, where we just go live on the market. I'm scanning the MLS, I'm scanning the auctions, and I start showing you guys, hey, this looks like a good deal. I'm just going to pull them live for you guys. Just a good deal. We'll underwrite them together, and you guys will see the process and how you can speed this up. It takes some of us like hours and hours and hours to underwrite deals. I'm going to show you how to do it in like 5-10 minutes, how to do it very fast so you can move on with your day. But this is how you'll be able to snipe deals. So I'll show you guys some of that stuff. But that's a hard money loan. So this is what I'm doing every day within our Boots on the Ground program, is finding our Boots on the Ground members these high quality deals that will also cash flow. Local versus national, you will have local hard money lenders and then you'll have national ones. I want you guys tapping into the national relationships because you can take them with you. So even if you come into the Boots on the Ground program and you do a deal with me, I'm going to have you on. You're the owner. You own the deals. I don't own the deals. I don't get credit. You get the credit. So when we execute, you've now proven to a national lender that you could execute on a deal and you could take that relationship back to your hometown. Even if we did the deal in Philly, that relationship lives and breathes with you. So there's a lot of power there. In terms of the application process, you'll have two types of lenders. You'll have doc lenders and no doc lenders. The doc lenders, depending on how much leverage they're giving you, they're going to want to really underwrite you. I have some doc lenders, like our 100% lenders, they might underwrite you like a FHA mortgage. Like they want 2 years tax returns, pay stubs. They'll check your credit. They want you to fill out what's called a PFS, a personal financial statement. And then they will underwrite you, fast track you, kind of get everything done. So there can be that, or there are no doc lenders. So if you haven't filed your tax returns, you don't have W-2s, there are lenders for that too. There, like I said, there are lenders that'll go down to a 500 credit score. So it's all about who you're talking to, but you want to have good hard money lending relationships. Of course, I can help you with this within the construct of our mentorship programs that we have. We talk about this on the ride along. I share resources all the time. You guys should know that from some of the testimonials from some of our mentees.